Okie dokie. Okie dokie, everyone. First of all, hello there. Second level, can I wish every single one of you either a good morning or a good afternoon or even a good evening, of course, depending where you are around the world. My name is James, and I'd like to welcome you to tonight's webinar, which is simply called How I Came to Terms with My Losing Trades. Written by myself, of course. This is James Trescothick. I'm the Chief Trading Educator here at Stratton Markets. Now, before we get on to a little bit of an introduction on myself and obviously going over tonight's agenda, we of course will be talking about CFD and online trading. Now, like with every type of investment, online trading and CFD trading does indeed carry a great deal of risk. So I do suggest every single one of you do your own research and due diligence and know the risks at hand before entering any trade. Now, with that out the way, this hairy, wrinkly, potbelly individual is myself. Like I say, my name is James Trescothick. I'm the Chief Trading Educator here at Stratton Markets. I've actually got over 20 years experience in the financial service industry. I started off in mortgages, in commercial and buy-to-let mortgages, moved into pensions and commercial property before entering the online trading arena around about 12 to 13 years ago. I've traded through the Dubai Gold and Commodity Exchange, where I traded gold options. I also ran a floor at the Philippine Stock Exchange before moving into portfolio management and then obviously education. I have got a very solid knowledge and experience in this market, which I'd like to share with you. And I'm also extremely passionate. Again, I will share with you. But one thing I always will say about myself, and not enough educators out there say about this, is I would never once call myself an expert. But I do hope that the information and the knowledge I share with you, you can take away and learn to build your own knowledge and experience in this industry and find it useful of finding your own path. Now, I'm also a published writer. Like I said, I've got quite a fair bit of experience and things like this. A published writer, and I've been published in leading industry publications. Now, these include the likes of the Financial Times Advisor, where I wrote an article in reference to the British pound and Bank of England. I've also been published in Markets Aware, Markets Watch. I've had commented on that, The Street, City End newspaper, and several FX magazines. Like I said, I've been published quite a few places. I'm also, again, this is to do with my passion, I'm very much an avid market commentator. So I talk about the market a lot. I'm very passionate about it. And I do get very excited about when things are moving, things are happening. I'm also a well-known public speaker, and I've spoke in several massive industry events around the world, including China, Dubai, UK, etc. So, fairly well traveled. More recently, South Africa, actually, of all places. Now, tonight's agenda, like I say, we're talking about how to handle losing your trades. Now, first thing, we're going to go over a bit of a topic called basically underlines the fact that losing really is part of the game. Losing is all a part of trading. Okay, so we'll discuss that. Then we'll go through the things not to do when you're suffering losses. Then we'll go through some ideas and some tips and some ways forward of how you can move forward with your trading and how you can, what I helped me and which will hopefully help you handle your losing trades and how we can learn from it. Then we'll talk a little bit about a few educational events coming up for the rest of the month. This is a short one, you'll be pleased to hear. And of course, I'll do my usual question and answer session at the end. And like I say, if you have any questions, please ask me at the end of the session. And if indeed I know the answer, I will certainly share it with you. Now, I've got that. Let me actually tell you what, let me show you me. Here I am in the corner. Hello, everyone. Right. Losing is all part of trading. Okay? Part of trading. Now, the most common mistake that most new traders make is believing that to be a success at trading, you must never lose, which is just just wrong, okay? Because this leads them into searching for the secret answer, the holy grail, so to speak, the secret answer to how to crack it, which does not exist, okay? It doesn't exist. There's no secret formula of making sure you win every single trade. It does not exist, okay? The fact is, and the reality is, that most successful traders, I'm saying successful traders, they have about a win to loss ratio of 50%. So 50% losing trades, 50% winning trades. Because losing is a part of trading. It's simple as that. You know, no matter how good you are or how good you think you are, no one is bigger than the market. No one's bigger. Okay? And losing is unavoidable. You're going to lose some of your trades. You're going to have losing trades, simple as that. But the difference between what makes a successful trader and what makes an unsuccessful trader is that the successful trader, they know this already. They already know that losing is all a part of trading. And they often go into the market expecting to lose on that trade because they know it's most likely, it could most likely happen. Now, you know, going back to the new traders, their biggest mistake, you know, they try and go for the loss aversion and, you know, simply not trying to lose no trade, because loss aversion is not the answer to successful trading. Okay. And at the end of the day, being a bad loser will add or will end, shall I say, your trading career. Okay. Will end it. Because if you can't take a loss, or if you're not prepared to take a loss, or you're not aware that you will have a loss, okay, this will lead to the following if you can't grasp these things. Number one, demotivation. You'll be demotivated. And on my previous webinars I've done, I've discussed about risk management and strategy and having a plan. And, you know, one of the strong key points of trading is discipline, and, you know, being disciplined. And to have discipline, you need to be motivated. So if you can't handle losing a trade, straight away you're going to be demotivated, which will go all the way back against what we're trying to achieve there. Revenge trading. Okay, if you can't handle a loss, you do a revenge trade. And this is very, very common. What a revenge trade is. Revenge trade is basically you take a loss and without thinking or, understanding exactly what's gone on or why you had that loss, you jump straight back into the market to regain that loss back. It's called revenge trading, and it's one of the biggest reasons a lot of accounts get killed out, gets killed off. I mean, for example, I had no doubt those of you who are with me tonight who are trading already, okay, you've had a winning trade in the market, losing trade in the market. So you've gone long on the euro dollar and it's losing, it's lost, and the market's moving against, going, it's collapsing, go short. You've got a long position, you lose, you close it, take a big loss, and straight away what you do, you go short, trying to catch the market going downwards because you think, that's called revenge trading. You go jump straight back in and you don't actually know why it's going down all of a sudden or why it's going up, whatever. So you jump in just to reclaim that loss back. It's an emotional trade, because revenge, let's face it, is one of the biggest human emotions. So revenge trading, if you can't take a loss, you end up revenge trading, which is one of the quickest ways of killing your account off. The second is deception, and that is basically deceiving yourself and blaming something else, blaming the market, the platform, the broker, whatever. And we'll talk a little bit more about that. And the other thing, if you can't handle a loss, let's face it, it's painful. It's painful to lose money. Nobody likes it. But by losing that, you lose control of your emotions as well as losing your money, which means you totally lose focus. So these are the things, that if you're a bad loser and you can't take a loss, you'll go down these paths and it will make things and make the account and matters worse. And prevention. Let me take you off a second so you can read the rest. Prevention. When you focus too much or too emotional attachment, because you've got to be detached from trading, too emotional attachment to a losing trade, this could cause you to lose focus, which means more losses are likely to follow. So those are the things that will happen, or you do, that if you're a bad loser, will end your trading career. Now, how not, I'm back again. Yay, here I am. How not to cope with losing. Okay, these are a few things people do which doesn't help with getting over the fact that you've got a losing trade or you're losing trades. Okay, first things, one of the first things is suppression. It's where you hide it into your belly, keeping those negative emotions inside. Okay, because hiding negative emotions of losing means you cannot learn and move forward from it. It means you're not learning. You can't look back on it. You're holding those emotions in, which means you're not going to learn from it. You've got to accept that loss. You've got to accept that it hurts. Okay? No pain, no gain, as they say. I hate that cliche, but it's true. The other thing people do, which is not a good way of coping with losing, is deception and projection. Same thing I said again. Blaming the loss on something else. Blaming the loss on the platform, the market, the broker, somebody else, somebody told you a tip which was wrong, market conditions, whatever, and not taking responsibility for your actions. That's a big one, okay? Because that is not how you cope with losing, by deceiving yourself. And second is denial. Excuse me, denial. Living in hope that though, for example, you've got a trade in the market, though that trade is losing, it will rebound in your favor and you keep it open, or that your losing strategy, what you're doing, will eventually start to work for you, will turn around. The old saying, sign of madness is doing the same thing and still getting the same results. So denial is another reason or another thing not to do to cope with losing. So how to cope with losing? Lovely. So how to cope with losing? Acceptance. That is the first thing. Acceptance. Accept that losing comes with trading. Accept it. As soon as you got to grips with that, the better. Love your losing trades. And that sounds really funny. How can I love losing, James? That sounds ridiculous. But love your losing trades, because this, by losing, is how you learn about how you react, how to control yourself, and also how to learn about the market. So learn to love your losing trades. Reduction. If you're taking big hits, okay, you're suffering big losses, might be an idea to start lowering your exposure, as in trading smaller contract sizes. So if you're trading lots and you're heavily lost and you're taking losses, reduce them. Go to half a lot, quarter a lot, micro lot. Start reducing your exposure. Take a break. We've all had bad days. We've all had bad trades, So walk away from it. Close down your laptop, close off your mobile, whatever your thing is. Close it down and walk away from it, and walk away from the day. Because this will help you not revenge trade. This will help you not go over emotional and then make mistakes. This will help you walk away from it and get your thoughts together. So take a break. Walk away from it for a bit and take a break. A journal. I'll take myself off. I'm always getting in the way, look. Journal. And those individuals who've come to my other webinars, they know I bang on, I go on and on and on and on about this. A journal, a trader's diary. Record your trades, record your experiences, because that is one of the best ways to find out about yourself, see what mistakes you're making, record your trades, and build a plan and strategy for you. So this helps as well. Journal. Make sure you start writing down a journal and recording your trades. Now, we're talking about losses, of course. And one of the other things is knowing when to let go of a losing trade. Okay, and that's one of the biggest fights. And I know a lot. Those who've come, I've already spoken about this on so many times. The battle of fear and hope, which happens to everybody. It's an example. For example, when you have a winning trade in the market, you fear that it's going to go against you, so you close it really quickly, snatch that small profit. Then when you have a losing trade in the market, instead of getting scared of it, you're hoping it will come back, and obviously loss gets bigger and bigger. Big battle of hope, fear and hope. Biggest challenge, biggest hurdle for most people to overcome. But yeah, I've talked about that lots of times. But knowing when to let go. So the whole idea of cutting your losses early, using a stop loss, using a trailing stop, which I talk about, understand support and resistance. So these are the sort of things which can help you understand when to accept a losing trade or when to control your losing trades, okay? Now, cutting losses early. Now, here's the thing. This is something I like, just hang out, chuck out there, okay? Now, reacting on a loss, in my view, is not really the way forward, okay? So really, cutting losses early really shouldn't be really a strategy. And let me tell you why I think that. It's because instead, I believe, again, going to the trader's diary, trying to take the emotions, trying to go step by step, I believe that you should already have an understanding of where you're going to get out of the market before you've entered the market. So you should already know where you're going to put your take profit and already your loss before clicking trade now. So cutting losses early should be already prepared. It's not a case of getting in the market and cutting it manually. It's being prepared for it already, knowing where your stop loss is or where your take profit is. And a plan really should be established, already established on your losses. And basically your losses will be cut based upon your trading style and strategy. So it's already part of the plan. Stop loss. Excuse me. Sorry, dry throat. Stop loss. Okay, this is another thing you can use to help with your losses. And this ideally really should be one of the key elements to your plan. Should be where you're going to set your stop loss, where you're going to cut yourself out of the market. I think this is more important than where your take profit is. Stop loss. This is key. You should know where your stop loss is first on your trade before you jump in, and it should already be part of your mind way before, obviously, the take profit or anything else. Because by setting your stop loss straight away, you're managing your exposure. Okay, and this is the idea, because if we're going into the market, we're assuming we're going to lose, so straight away we should know exactly what is the minimum, or sorry, the maximum we're willing to lose in that trade. So it should be set pretty much straight away. And like I say, that stop loss should be based upon your account size, your contract size, and indeed, of course, your attitude to risk. And it should also be based upon your risk management structure, what risk management program you got in place. And that would also help you at the same time, if you have your stop loss already set, will help you calculate your risk reward ratio. Trailing stops. Now, I really like I think the use of trailing stops can be really handy. And I'm surprised really how a lot of people don't use them, or don't go in, or don't even think about using them. I remember the time when I was looking after a number of VIPs, who had a lot of winning trades in their market. Obviously, I'm not allowed. couldn't give them advice because it's not allowed to give advice. But I give them support, and I would give them market overview at a time what I thought was what things to be looking at with. And they would often talk to me and ask me, they had winning positions, what I think. And I said, I can't give you advice. Okay, I can tell you that obviously the market is volatile and dangerous, but why don't you do a trading stop? Because you're in a profit. Why don't you move your stop up, locking in some profit? And so many people never ever did that. And then obviously the market has a habit of turning on you, and often those winning trades would become losing trades. So I think it's the trading stops. I'm surprised so many people don't use them, because really, it's a great way of protecting yourself, but also locking in potential profit. Because trading stops move when the asset you are trading is moving in the direction you anticipated. It's going in your favor. And the idea is, by using the trading stop, you reduce your risk. Okay, you risk in the market. But at the same time, you start locking in some form of profit with your trade. Now, you can do a trading stop either manually, moving your trading stop, or if you're using MT4, you can set it on your trade automatically. So, it's a great tool to be used there. A very good tool to be used. And let me give you an example of how it works. So this is obviously the cable, okay? This is a theoretical example, all right? It's just an example of how it can work. So let's say, for example, we entered the market around this sort of level. And initially we set our stop loss, about here. Okay. Get my laser pointer. So we set our initial stop loss here. So we've entered here, and this is our stop loss, and this is exactly what we've decided to do before we go into the market. Okay. So it starts moving in our favor. Okay, going upwards. So at this point here, we're in a bit of profit. Okay, so what we do then is we move up our stop loss up, okay, taking off our risk, but also locking in a little bit of profit. Okay, and then as the market moves higher in our favor, we do it again. Okay, we move our stop loss up. Okay, again, taking all our risk out of the market because our margin would be clear there because we're in profit, and locking in some profit. Okay, and this is a good tool again of controlling our losses, and being better prepared. So I do like trading stop. I'm surprised so many people don't ever go around to using them. The other thing, of course, which is really good to understand or control your losses is understanding support and resistance. Now, again, for those who haven't been to my other webinars about support and resistance, support is a level which acts like a trampoline, and it's a level where an asset can fall to, hit, and then the market jumps in and starts to buy again, pushing upwards. And resistance acts as a ceiling where an asset can come to, hits, and the market starts to sell again. So it starts to drop off. So it's always a good idea to understand where the potential resistance and potential support is. Now, understanding these and knowing how to identify these can again help you set your stop loss and your trading stops. Okay. So for example, if I go back on my example here, okay, if you look here, okay, it's just, again, it was just an example, but theoretically speaking, I set on this example, my stop loss around about just below a level where I've seen the market initially come down and then bounce back up again. So that's there was a potential support where I could see the market buying in. Again, this is just an example. I've just done this. It's not an actual trade. It's just an example to illustrate it, but that is what I mean. Okay. Understand where the support is. And that, like I say, can be really helpful. At the same time, if we know where the potential support and resistance is, again, like I say, it's helpful for setting our stop loss. It's helpful for setting our potential take profit. It's helpful for possibly getting in or entering or exiting the market. But if we can also recognize when a potential level has been broken, we can be then prepared for a potential breakout and things like that. Okay, so you understand support and resistance is also a key factor to controlling losses. Now, my other up-and-coming events the rest of the month, you'd be pleased to hear, all those who've joined me on the last couple, I've done a lot about psychology, emotions, risk management, handling losses, handling fear of trading. Okay, you'd be pleased to hear I'm moving on from that for now. I'm going to go back and start talking about technical analysis. Okay, which will be hopefully more so interesting for people. So on the 18th of September, I've got a webinar called How I Came to Understand Channels and Trend Lines. We're discussing uptrends, downtrends, drawing trend lines, drawing channels, discussing raging markets. So it'd be a lot more technical analysis based. Okay, so for those of you who are probably sick to death of me talking about the psychology and the emotions of trading now, that will be very useful if you're a technical analysis person. And then on the 25th of September, again, just to shake it up a little bit, I'm going to talk about how I started paying attention to stocks. Because obviously, as you know, we trade many markets here at Strata Markets. A lot of my trading is often to do with commodities and currencies and things like that. I want to actually shake it up. Let's talk about stocks, because, stocks are also there and they could always potentially, maybe something worth looking at and keeping an eye on. So on the 25th, we're going to talk about how to pay attention to stocks and understand a little bit more about stocks and shares. And of course, I keep saying this, but it is nearly ready. I promise you. Your Market Fix video series will be released very, very soon. And hopefully you'll enjoy it, etc., and find it useful. So keep an eye out for that. Now, if you want to speak to me, you can indeed. You can either email me at james@stratomarkets.com if you have some questions after this webinar you suddenly think of, or indeed if you want to book an appointment to have a personal one-on-one phone call with me, just a quick chat to talk about your account and talk about trading, please feel free. Please feel free, okay, to contact me, and email me there. Certainly, if there's any typical topics or things like that you'd like me to cover, perhaps you want me to do a case study on euro dollar, which somebody has asked for. Someone has asked a case study on oil, which I will do. Maybe there's something like that. So please feel free to email me and contact me. Twitter, you can contact me on Twitter or direct message me at jtruscothic. Follow me if you like. It's an exclusive group. I sometimes give you up and let you know about up and coming stuff coming on the markets and things like that. And it matches my personality. So please follow me on Twitter or my handle at jtruscothic. Now, before we get on to questions, and I see a question from Dennis, and I see it's not a question, but I'll talk to you in a minute. Remember, we're talking about CFD and online trading. Like all investments, it does indeed carry a great deal of risk. So I do suggest every single one of you do your own research and due diligence and know the risks at hand before entering any trade. Now, with that out of the way, let's go on to questions. And it wasn't a question, but it is a good point, Dennis. First of all, good to see you again, Dennis. Very good evening to you, my friend. Welcome back. Very good to see you. Now, okay, right, you should have had the link because all these webinars are recorded. And as soon as you've done your email address and everything, you should get the recording of the webinar straight away. So you should have that. However, hi, buddy. However, if you haven't, it might be in your junk file, but tell you what, if you haven't, I've got your email address on the registration link. I will send it to you myself personally tomorrow. At the same time, if there's any other webinars I've done, which you've missed, let me know and I'm happy to send them all to you so you can have a look. Oh, and just so you know, actually, heads up to everybody else, okay? You didn't receive any link. All right, Dennis, no problem. I will personally get it to you, okay? Don't you worry, I'll personally get it to you. You should have received it, but I'll get it to you anyway. But just talking about these recordings, just so you know, we're obviously getting ready for a brand new website, which is really exciting. And there's going to be an educational center on it, which I'm building a lot of the material for. And on some of the educational center, some is going to be all the previous webinar recordings, okay? So you can go back and watch them and to your heart's content, any things you've missed. And of course, as I'll be doing new webinars every week, there'll be new fresh recordings going up on a weekly basis. No problem, Dennis. It's my pleasure. So you should have got that link, man. My apologies there. But I'll double check it and get that sorted for you. And if there's any other webinars you would like to have, it goes to everybody, please let me know. I'm more happy sending out to you. Is there any other questions at all? Anybody else like to ask me anything? And if I know the answer, I'll happy answer it for you. Cheers, Dennis. Thank you, Dennis. Thank you, my friend. Is there any other questions? Anybody else like to ask me anything at all? Or everybody bored of me by now? Okay. Did everybody find it at least interesting? You found it interesting, slightly, hopefully useful and helpful. I know it sounded a bit basic, some of the stuff I said, but it's not being funny. If you understand these certain things, it will likely help you with your trading career. Brilliant. Thank you, Dennis. Thank you. I'm glad you liked it. Right. Yes. Oh, brilliant. Thank you, Dean. Good to see you as well, Denny. Nice to see you again, my friend. Good to see you. Thank you. Thank you very much. Right. Well, everybody, ladies and gentlemen, if there's no other questions, please feel free, like I say, to contact me and let me know if you have any requests in the future, okay, of any things you'd like me to cover, or indeed if you have any questions later on down the line, you suddenly think I should have asked James, please feel free to email me at james@stratton.com, strattonmarkets.com, or indeed, like I say, contact me, direct message me on Twitter whenever you need. So if there is nothing else, can I then just say, can I wish every single one of you either a good morning, good afternoon, good evening, or even a good night, depending where you are around the world. Till next time, and I look forward to seeing you all again next week. Till next time, every single one of you, trade safe.